Good day, everyone. Today we're delving into the Federal Reserve's recent decision to maintain interest rates and what this means for our economy. On March 19, 2025, the Federal Reserve announced it would keep the federal funds rate steady at 4.25% to 4.5%. This marks the second consecutive meeting where rates have remained unchanged, following 3 rate cuts in late 2024. The Fed has adjusted its economic outlook, projecting GDP growth to slow to 1.7% this year, down from an earlier estimate of 2.1%. Concurrently, inflation is anticipated to rise to 2.7%, exceeding the Fed's 2% target. Several factors influence this decision. Notably, ongoing trade tensions and tariffs have contributed to higher consumer prices, adding complexity to the Fed's mandate of balancing employment and inflation. The markets responded positively to the Fed's announcement. The S&P 500 rose by 1.7%, the Dow Jones Industrial Average added 589 points, and the Nasdaq Composite surged by 2.3%, reflecting investor optimism. Looking ahead, the Fed has signaled potential rate cuts later this year to support economic growth amid rising uncertainties. However, they emphasize a cautious approach, closely monitoring economic indicators before making further policy adjustments.
The Fed's decision to hold rates steady reflects a prudent approach, given the mixed signals from the economy. It's essential to balance the risks of inflation with the need to sustain growth. Economists, too, trade policies are creating headwinds for the economy. The Fed's cautious stance allows them to assess the long-term impacts before making further monetary policy changes.
For consumers, stable interest rates mean borrowing costs for mortgages and loans remain unchanged in the short term. However, the potential for future rate cuts could lead to more favorable lending conditions later this year. In conclusion, the Federal Reserve's decision to hold interest rates steady reflects a measured approach amid economic uncertainties. As developments unfold, staying informed will be crucial for both investors and consumers. If you found this video helpful, don't forget to like, share, and subscribe to our channel for the latest economic updates and financial insights. And hit that notification bell so you never miss an update.